Ethereum has been through a brutal descent, but something is quietly shifting beneath the surface, and most traders are not positioned for what could come next. The weekly structure is changing, compression is building, and right now Ethereum is sitting at a battleground level that will determine whether buyers have the strength to reclaim lost ground or whether the sellers step back in. This is not a simple chart. There are layers here: yearly context, price gaps, volume signals, all telling a story that most will overlook. By the end of this Ethereum Technical Analysis video, you will know exactly where Ethereum stands, the key levels that matter, and why the next move could be significant. Are you positioned for what comes next? Let's get into it. To start this Ethereum Technical Analysis, we want to zoom all the way out, because this will give us a unique insight that many will not even be aware of. We start by reading the position of the market from a higher time frame perspective. Can you see where we are in the yearly picture? What can we learn? Let's break it down. We are covering 7 years of trading on this chart, and positionally, Ethereum is below the midpoint for 2026, 2025, 2024, 2022, and 2021, and it is below the high of 2023. But at the same time, it is above the 2020, 2021, 2022, 2023, 2024, and 2025 lows. So what initially looked like weakness is not looking so bad. The way to draw a trend line is that it must touch a minimum of 2 points. Those 2 points in this current Ethereum Technical Analysis are the 2022 and 2025 lows, giving roughly a price mark of 1650. This gives us something to measure any downfall of Ethereum. From a higher time frame analysis, we now have some context as we drill further down. Now we move down to the monthly. Our all-time high is on 24 August 2025 at $4,997.51. Our monthly swing chart then has a cascading downfall, culminating in a low on 7th February 2026 at $1,991.81. And there is one more date we need to record, and that is the 2026 high on 14th January 2026 at $3,396.62. You will also notice that price fell sharply from the 28th January high at $2,909.85. Another number we want to note in our notebook. The descent left no support and tumbled to the 7th February low. But the rally that is happening now is buyers attempting to make up for lost ground. Perhaps these are buyers who were caught off guard and are looking to recover losses, or new buyers seeing a buying opportunity. Whatever the emotional reason, we are in a rally. This has now given us a good picture of market structure from the top down. Let's dig deeper. We are now looking at the weekly swing chart, and this is where it gets interesting. We have kept our yearly high at 14th January 2026 and the yearly structural low on 7th February. We see more clearly the price gap created by the sudden descent from the 28th January high. The weekly swing chart is in a downtrend. We know this from the familiar pattern of lower highs and lower lows. But at the same time, the Ethereum market structure is changing, and this is the fractal nature of markets, which makes trading and investing so compelling. The first thing to take note of since the 7th February low is that the weekly swing chart has swung up. But not only that, last week, week 19, we have had a shallow pullback to a swing low on 29th April. This is creating a higher low, and if buyers have the strength to take out the 17th April high, it means we have a higher high. Higher high, higher low, we have a weekly uptrend. This change of character is where you can position yourself early before others, not so savvy in reading price action, get in late. Now let's start layering some more price action and volume tools. Our most useful tool is Fibonacci price zones. Our bottom Fibonacci price zone, which we don't need to discuss today, other than it found support at the 7th February low and preempted the current rally we are in. Current Fibonacci support sits between $2,204 and $2,217, and Fibonacci resistance sits between $2,572 and $2,614. When we add the 2026 anchored VWAP, price action is sitting right in the middle of it and is still negotiating whether it wants to go above or below. Our volume measurements are telling us the same as price action. We see a compression in the monthly ranges from 1150, 719, 473, 444, and 161. The figures don't lie. We are compressing for a bigger move. Currently, we are trading on its lows, as shown by the close strength meter as it tests the Fibonacci support zone. If buyers are able to keep hold of the support and break the swing high on 17th April at $2,464, they can challenge the Fibonacci zone between $2,572 and $2,614. A break and close above, and we can fill the price gap created from the 28th January high. Then it's a matter of seeing the strength of buyers. If very strong, they can even challenge the 14th January yearly high at $3,396.62. On the flip side, if we break our current Fibonacci support zone between $2,204 and $2,217, we could see a test of the 7th February yearly low and the next level down of the Fibonacci support zone. For now, the battleground is above 2,200, and we are on the verge of creating a swing high and pushing much higher. It's up to buyers now to show their strength. So these are the key levels and structures we are watching closely. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read, and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to our channel, Crypto Trading Mastery. We publish every day Bitcoin and crypto analysis, and hit the notification bell so you don't miss our next video. Thanks for watching, and we'll see you in the next video.